Today's episode is brought to you by Stream by Mosaic, an expert interview transcript library that integrates AI-generated call summaries and NLP search technology so their clients can quickly pinpoint the most critical insights. Start your free 2-week trial on their website at www.streamrg.com. That's STREAMRG.com using the promo code MicroCap. This podcast is for informational purposes only and is not an offer or solicitation of an offer to buy or sell securities. SNN Network, SNN Inc., and the Planet MicroCap Podcast and the representatives are not licensed brokers, broker-dealers, market makers, investment bankers, investment advisors, analysts, or underwriters. We do not recommend any companies discussed. We may buy and sell securities in any company mentioned and may profit in the event those securities rise in value. We recommend you consult with a professional investment advisor, broker, or legal counsel before purchasing or selling any securities referenced in this podcast. Welcome to the Planet MicroCap Podcast. I'm your host, Robert Kraft, and thank you all so much for the support and for tuning in. You can follow Planet MicroCap on Twitter at Bobby K. Kraft. That's BOBBYKKRAFT. You're listening to episode 207. If you have any questions or comments, please feel free to tweet at me or shoot me an email at rkraft@snnwire.com. And when you do get a chance, if you like what you hear, please rate and review Planet MicroCap on iTunes. It really helps provide feedback for me and spread the MicroCap message. Special thank you to our sponsors for today's episode, Stream by Mosaic, an expert interview transcript library that integrates AI-generated call summaries and NLP search technology so their clients can quickly pinpoint the most critical insights. Start your free 2-week trial on their website at www.streamrg.com. That's STREAMRG.com using the promo code MicroCap. And Quarter, whose mission is to change the way people look at investor relations and create a completely new bridge between companies and stakeholders. Visit your app store of choice to try it out. And that's Quarter, QUARTR. And before I get to some other announcements, this is our last episode of 2021. So I'd like to wish all of you a very happy, healthy, safe new year. Again, thank you all so much for listening, for supporting Planet MicroCap over the years. I'm very excited for everything that we have lined up for 2022. And most importantly, I hope to see some of you in 2022. I'm ready to get out there, mingle. Let's do some in-person stuff. And but for the time being, let's stay safe. Let's get through the new year. Let's get through some of these colder winter months and look forward to a great 2022. Speaking of which, we are very excited to host our first in-person event in nearly 3 years. The Planet MicroCap Showcase is back in Las Vegas on May 3rd through the 5th, 2022 at Bally's Hotel and Casino. It's time to see each other. It's time to network in person. Let's make it all happen in the entertainment and business capital of the world. For more information, please go to www.planetmicrocapshowcase.com. See you in Vegas. Now, for this episode of the Planet MicroCap Podcast, I spoke with Shawn Badlany. He is the founder and CIO of Honest Capital, LLC. And we were introduced by recent podcast guest, David Polansky from Immersion Investments. Thank you, David. Shawn was featured in Reuters earlier this year, January 2021, for Honest Capital's outperformance and the bets he placed since launching his fund in May 2020. An incredible story on its own. We discussed starting a fund in the midst of all the uncertainty and why he placed his bets on cannabis. So thank you again for tuning in to episode 207 of the Planet MicroCap Podcast, and please enjoy my conversation with Shawn Badlany. This episode is brought to you by Stream by Mosaic. You can find them at www.streamrg.com. That's STREAMRG.com. Stream is an expert interview transcript library that is starting to become an integral part to investors' research process. They have a number of interviews on a wide variety of companies, including TMT, consumers, industrials, real estate, and more. Stream provides over 300 expert interviews per week, and 70% of their experts are found exclusively on Stream. Stream was built by Mosaic, and unlike any other transcript libraries, Stream integrates AI-generated call summaries and NLP search technology so their clients can quickly pinpoint the most critical insights. Stream's community of experts and thought leaders partner with Stream to build their professional brands and expand their industry influence. Right now, there are approximately 8,500 plus call transcripts available. For more information, please visit www.streamrg.com. Welcome back, everybody, to the Planet MicroCap Podcast. I'm your host, Robert Kraft. You can follow me on Twitter at Bobby K. Kraft. That's BOBBYKKRAFT. And I'm very excited for today's guest, who was introduced to, we were introduced to each other vis-a-vis David Polansky from Immersion Investments. So David, big shout out. Thank you, sir. And upon doing some further research, I think y'all will be really excited to learn a bit more about what our guest has in store for us and everything that he's accomplished. So without further ado, I'd like to introduce Shawn Badlany. He is the founder and chief investment officer at Honest Capital. Shawn, thanks for joining me today. How you doing, man?
Great. Thank you so much for having me on the show.
Absolutely. But by the way, remind me, where are you based? You're in San Fran, right?
Yes. Yeah, I'm right outside San Francisco.
Okay. Yeah, we've been dealing with some crazy weather the last couple of days. So I know we had a false start this morning and getting on with the tech stuff, but
right.
Thankfully, listen, everybody, LA, we have a lot to complain about. You know, everything is really difficult, but you know, when you have a couple of days of hard weather, it's sometimes hard to connect. But long story short, Shawn, this is our first time doing an interview together, our second conversation together. So I'd love to start off with your passion for investing. Where did that all start? Where did it all begin? Like, let's start from there.
Yeah, definitely. I mean, I'm not someone who just kind of like knew from coming out of the womb that he was like born to be an investor. I mean, I had a lot of interest growing up. My family had a lot of doctors and engineers, so I was always kind of math, sciencey interested. When I was in high school, I took an economics class that I really thought was super interesting, just kind of like applying math, but applying it to like, really complicated, there's no more complicated system than like people and how they behave, and so just kind of like trying to take a social science and applying math to it, I thought was interesting. And then, my dad also, he was an engineer, but like he was always kind of like interested in the stock market. And so when I was in high school, I would kind of mess around with him, trading some stocks. But it's funny because in retrospect, I realized we had absolutely no idea what we were doing at that point. And it's a kind of a good reminder because it shows you like, when you're looking at the market, how many people are like that, who are just kind of like have absolutely no idea what they're doing, but they're trading, trying to make money. And so, for me, my first job out of college was in investment banking. And then I think one of the things that really kind of got me way more interested in the stock market and investing was when I worked at Blackstone, not in their private equity group, in like an investment banking advisory group that they had. And one of the things that really kind of like ended up kind of setting my career off in this direction was my group got hired as advisors by Bill Ackman at Pershing Square. This was back in 2004 when his fund was brand new. It was under $1 billion. Like he was not a famous or infamous person like he is now. And so I got to work really closely with him on I think the first activist investment that he made out of Pershing Square, which was in Wendy's. And at the time, Wendy's owned Tim Hortons, and he was the biggest shareholder of Wendy's. He wanted Wendy's to spin off Tim Hortons because he thought Tim Hortons would trade at a much higher multiple on its own because it was growing faster than Wendy's and it was more franchised. So anyway, when I was 22-year-old investment banking analyst, I got to work pretty closely with him and his team. And, it really actually changed the way I thought about investing, because when I was in high school with my dad, we were like trading stocks, but observing Bill Ackman, and obviously, he's kind of a polarizing figure and, he does a lot of things really well, but, a lot of things obviously are polarizing that he does. But so anyway, you can have your own opinion about him, but at least I took away some really like huge lessons just from observing him. And it was just more the business owner mentality of like, thinking like a business owner when you buy a stock. pretending like you own the whole company, being prepared to own it forever, those kinds of mindsets that you really should have if you're buying any stock. That was kind of really, I think, what kind of a light bulb moment.
Hey, Shawn, I want to stop you there because this is something, one that's some great anecdotes, from that you learned from Bill. And I want to dive a little deeper just right here and now on that, because we've talked about that quite a bit. As an investor, you want to think about owning a part of a business. You're buying a business. You're not just buying a stock. How does that manifest for you? Because you think you're like, oh, it all makes sense. Yeah, we're buying a business. Oh, great. But like that means totally different things to so many different people. So for you, what did that mean to you?
Yeah, I mean, obviously, I'm a huge Warren Buffett fan. I mean, like a lot of people are, obviously. And he always says, like, I think one of his quotes is like, if you're not prepared to own this company for the next 10 years, don't even think about trying to own it for the next 10 minutes, that kind of thing. So to me, I think that's really what it means is like, it's so tempting to kind of like, buy a stock that you think is really beaten down and sell it when, try to catch it kind of going back up and then sell it. And it's tempting to do that. And, I mean, I still do that sometimes, I'm not going to lie, but I think what has changed for me is I want to make sure that even if I'm doing those kinds of things, which I think could be shorter term holdings, I still want to make sure that the underlying business is a business that I like and I'm comfortable with. And, maybe I don't want to own it for the next 10 years, but if I'm wrong about the short term, I don't want to be stuck in something that I hate, like I at least want it to be a business that I think is a good business, So I think that's one of the things that's evolved over my career is I think earlier in my career, I would be more willing to do that with like, businesses that are lower quality. But now I just feel like life is too short and anything I buy, I want to, there's thousands of stocks you can buy. So like, why not be selective and try to make sure it's a business that actually has some kind of moat or competitive advantage or some growth opportunity or right. Something,
Hey, this is a mental model that I don't hear a lot about but because we all, again, like we talk about, as an investor, you want to buy a business versus a stock. Has anybody? I've never heard about the idea of would I want to join this business? Would I want to work here? Like that's something I think about quite a bit in terms of when you're looking at evaluating a stock. Like, is this a company I'd be passionate about? Is this a company that I actually want to, I wouldn't mind going to work 8 to 5 every single day. I mean, are these things that you think about as well?
Yeah, that's a really good point. And I'm really glad you brought that up, actually, because I do think about that. And I don't feel like everybody does. I mean, I feel like for me, investing is what I've chosen to do for my job, but this is also my life, right? And so like, I want it to be fun. And so I like investing in companies that, I'm more excited to kind of learn about because I am interested in them. And so, I've worked for different people who are really cold and emotionless and like calculated, and they don't care what the underlying business is. They just want to make money. And don't get me wrong, I want to make money too. That's why I'm here. That's why I'm doing this. But it's way more fun if, you like what you're investing in. And so I am trying to have fun while I'm doing it. And, I've heard people always talk about like, how you need to be kind of like, don't get attached to your stocks, be emotionless. And, I feel like one of my most contrarian kind of beliefs is like, or not beliefs, but just one of the things I do that is kind of like different is like I do get attached to my stocks. Like I'm I'm okay with that because again, like, this is my life, this is fun. And I get emotionally attached to stocks. Like I'm not afraid to admit it. At least I know that I feel like that's at least one thing that's important. Is like, at least you have to be aware of, your own tendencies and your biases and things like that. So like, I do get emotionally attached to stocks. I think it's okay as long as you realize what's happening.
I'd like to take a quick second to tell you about this episode's sponsor, Quarter. With Quarter, you get frictionless access to conference calls, investor presentations, transcripts, and earnings reports from markets all around the world, straight from your pocket for no cost. Quarter's mission is to change the way people look at investor relations and create a completely new bridge between companies and stakeholders. The first step on this journey is to let you, the user, interact with the company's content while you're listening. Visit your app store of choice and try it out today by searching for Quarter. And that's Quartr. Now back to the show. I actually really appreciate that honesty because I feel like a lot of folks probably do. I mean, I know I have in the past.
Right.
And it's just human nature, I mean,
right.
Look, there's probably a 0.1% of folks that can be like that. And I'm reading about a few of them in William Green's book right now that I've been very much enjoying, but it's a very small percentage of folks. I would think, like you can't help but get upset if like, you make a big bet or even a small bet on a company based on a thesis that you worked a lot, you worked really hard on. Right. I mean, like that's hard, man. Like, totally. Even to have a little bit of attachment is okay.
Yeah, no, I agree. I agree. Yeah, I agree. Yeah. And so that's why I would say it's just like, at least try to be aware of what's happening. And that will hopefully at least, help you navigate it in at least hopefully in an incrementally more profitable manner.
Yeah, right. Yeah. So you make money, while you're attached, of course. Right. So, okay. So let's get back to, I want to catch us up to what led to your founding of Honest Capital. So you're at Blackstone, had some great experiences learning from Bill Ackman, or had an experience with that, so firstly, were there any other things that you learned from that experience and from there, catch us up to then founding Honest Capital?
Yeah, I mean, I think also just like the concentration of the portfolio as well, like before I had kind of had that experience working with Pershing Square, like I didn't even know it was acceptable to like run a public equity investing fund and only own like 8 stocks, so that was like a mind-blowing concept to me. I mean, I'm still not sure it is acceptable, even though I do that today. Like, I guess it's different people find it acceptable and some still don't. But anyway, just that also resonated with me too. It's just kind of like, what? It's hard to find good ideas. You want to do a lot of work when you do find them. And so, why would you own even 20 or 30 stocks? Just find a few that you can know really well and that you've been able to get at really good prices. And, that's kind of all you need. That's all you need to really make it work. So anyway, that resonated with me. So yeah, after my time there, the rest of my history. So I worked for a few years after that at Canyon Capital in LA. So I was in LA for a few years, and that's a great firm. Much more of a multi-strat, much more of a kind of credit focused firm. The founders there had worked with Michael Milken in the 80s, like creating the junk bond industry basically. And so I learned a lot about kind of distressed credit investing, which I think is great skills to have, even though I only focus on equities today. I think it kind of gives you a mindset that is helpful in equity markets. Just having learned kind of how credit markets work and how to navigate those, and just really thinking also when you're a credit investor, like you really focus on downside protection and avoiding mistakes, trying to avoid losing money. So all those lessons really stuck with me. And And also, I think it's also good training just to learn how to read through credit agreements and bond indentures. I feel like a lot of equity investors don't do that or don't know how to do that. And so I feel like sometimes that actually can give you a real edge in the equity markets, especially. It doesn't happen that often, but in times of distress like last March, a lot of what I was doing was these kinds of credit analyses, trying to figure out which companies were set up to kind of ride through the pandemic, and which ones were not, based on kind of the structures of their debt and their capital structures. So anyway, I worked at Canyon for a few years. I went back to business school at Harvard, got my MBA, graduated in 2010. And then most of my career until I set up my own fund, from 2010 to 2019, I was working at this fund in San Francisco called Marcato. And it was actually just an amazing coincidence, because basically the way it happened was one of the analysts from Pershing Square, this guy named Mick McGuire, who had been the second analyst at Pershing Square, who I had worked with on the Wendy's, Tim Hortons deal. Right when I was graduating business school, he was leaving Pershing Square to start his own firm, Marcato. And so I got back in touch with him and was super excited to join him, because he was doing basically exactly the strategy that I wanted, just really concentrated 10 stock portfolio, multi-year investment horizon. And, he was kind of, by the time he left Pershing Square, they had gotten really big. And so they were investing in Procter & Gamble and Target and these mega cap companies. And my boss, Mick McGuire, his thinking was, look, that's fine, but where the real excitement is in the small and mid caps, right? And so his thinking was, let's take that same Pershing Square approach of concentrated portfolio, long-term horizon, shareholder engagement, but let's kind of refocus on small and mid caps, because that's where the opportunities are, that's where the inefficiently priced stocks are, and also from an engagement or activist perspective. There's just so much more opportunity there to find companies where you might actually be able to add value by bringing them ideas that they hadn't heard before, they haven't already been pitched by investment bankers. And it's also just much easier to influence those companies too. If you become a shareholder, it's much easier to talk to the management team, talk to the board. If you show them that you've done thoughtful analysis and done a lot of research on their company, they're much more likely to listen to you, and kind of hear your ideas. And so that was kind of the idea of Marcato. And like I said, I worked there from 2010 to 2019. It was an awesome experience. We did run a lot of activist campaigns in companies that were smaller, anywhere from 500 million up to 5 billion plus kind of market caps. So I got a lot of experience kind of engaging with those companies, meeting boards and management teams, kind of forming good relationships with them, having dialogues with them. And in a lot of cases, we definitely got a lot of those companies to do what we were suggesting. And, it really, I have plenty of case studies that I'm really proud of, where I know for sure, definitively, we added value to those companies. And it was really, really kind of fulfilling to find those kinds of situations.
Very cool. I mean, do you have an experience or I guess an anecdote from during that time that was just definitely just added more layers to the Shawn onion, I guess you'd say, that you wanted to take forward to Honest Capital?
Yeah. I mean, there's a lot. I mean, there was, I think my favorite investment that I made was there's this company called Alexander and Baldwin. I don't know if you've heard of it or looked at it. But when I found it, it was this fascinating company that had started it was based in Hawaii, and it had started as a sugar plantation, in the 1800s. I think it was, I can't remember the exact year, but mid 1800s, this company had started as a sugar plantation. And fast forward to the 2010s, 150 years later, they were still in the sugar farming business, actually, but they had also branched out over time, and they owned these two really valuable but totally different businesses. One of them was this shipping business called Matson, which was a container shipping company or a container shipping business that basically they had started it as an extension of their sugar business to kind of bring their sugar to the mainland. But over time, what it had morphed into was these container ships that went back and forth between California and Hawaii. And it turned into basically the way that everyone in Hawaii gets everything that they need, from the mainland. And it was like the way that Walmart in Hawaii would stock their shelves. And it ended up being kind of protected by this US law called the Jones Act. So it was basically like this regulated business where there was no foreign competition allowed. They were able to raise their prices every year. So it was this and it was mission critical to everyone who lived in Hawaii. So it was this super valuable kind of monopolistic or oligopolistic business with pricing power and super valuable. But then Alexander and Baldwin had this other totally unrelated business, which was a separate outgrowth of their sugar business. And that was a real estate business where basically because they had got into the sugar business in the 1800s in Hawaii, they owned 20% of the island of Maui and 15% of the island of Kauai. And it was on their books at the prices they had paid for that land in the 1800s. So it was on their balance sheet at $100 an acre. And this land today is worth $100,000 an acre or something like that, So just totally insane situation. And they had all this valuable real estate in Hawaii. And so it was, when I first looked at it, it was only $1 billion market cap company, but they had this shipping business that I thought was worth more than $1 billion. And then they had all this real estate that was also clearly worth more than $1 billion, But it also kind of made sense why it was under the radar. It was a small company and it was in these two totally unrelated businesses, transportation and real estate. And so anyway, it was kind of obvious to me that they needed to split up the company, because there were transportation investors, classic kind of business school case study for a spinoff, right? There were transportation investors who would love to own the shipping business, but didn't want to own a real estate business or didn't even know how to think about or value a real estate business, and vice versa. You had real estate investors who would love to own that real estate, but had zero interest in owning a shipping business, right? And so anyway, we kind of became the largest shareholder of the company, and we basically, a lot of our investments were friendly, kind of constructivist or suggestivist. This one, it was friendly and constructive, but it was a little more where we kind of went to them. We were like, look, you guys need to split this up. Otherwise, we're gonna, take some more forceful action if you don't kind of split this up. And by the way, here's, we think the stock can double if you split it up. And so you guys all will make a lot more money if you split it up too. And so anyway, we convinced them to split it up. And now both of those companies are public. You can buy each of those stocks separately. Matson and Alexander and Baldwin are both publicly traded companies. They're both doing well. And so anyway, I loved it because it was just, there were so many fascinating things about it. The land being valued at it's just kind of an accounting convention that they had to keep carrying it at their 1800s valuation, and then it was just a great activist investment, kind of splitting up the conglomerate. And there were real hard assets, kind of the valuable real estate. I felt like there was tons of downside protection. And, I got to go to Hawaii for work. So I was
going to say, that sounds like the main reason you even got interested. But wow, that's a really great story. But and by the way, just have to ask: are you currently shareholder in either of the companies anymore, or?
I'm no longer a shareholder of either company.
Okay.
But you know, I mean, they're both great businesses. I mean, I continue to watch both businesses and admire them from afar.
Very cool. Okay. Well, listen, I want to transition now to what we got going on today at Honest Capital. So you actually, when I was doing my research on you, there was a great article that came out on Reuters, published January 15th this year, that said new hedge fund Honest Capital gains 88% with bets on cannabis and others. So hey, that's a nice little shout out. Not too shabby as a new hedge fund guy, right? So, tell us a little bit about, Honest Capital and this bet on cannabis at the very least. Love to hear your thoughts there.
Sure. Yeah. So yeah, just to kind of catch up to today. So I left Marcato at the end of 2019. I started my own fund, Honest Capital, in May of 2020. So, it's been a little more than a year and a half that I've been running my own fund. And, the strategy is very concentrated, 10 stock portfolio. I take a multi-year view on the companies, focus on North American small and mid caps that are just kind of under the radar, bigger investors, as you know. And the timing of the launch was really great. I launched May 1st of 2020. So it was an amazing time it was an impossible time to raise money, so at the time I was like, should I even do this or should I wait till, allocators can talk to me again and maybe I can raise more money for a day one launch. But at the time I decided to just, let me go ahead, let me just launch, even if it's with a smaller amount of capital than I hoped to launch with. The flip side of that is that it's a great time to be putting money to work. And so if I launch and put up a good early track record, hopefully that'll make it easier to raise money over time. And that was my thinking as I was sitting there May 1st of 2020. And, now in hindsight, everybody's like, oh yeah, like you launched at a great time. And so you had this great performance, but, you benefited from this good timing. And that's what everybody says now when I talk to them. Nobody remembers that May 1st of last year, it was terrifying, like it was terrifying time to be sitting there being like, I'm going to plow all this, I'm going to start my own fund. I'm going to start my audited track record and I'm going to put it all on the line right now when everybody in the world is freaking out. But, I'm going to toot my own horn. Like I had the courage to put money to work in that environment when everybody was freaking out. And yeah, now hindsight is 2020. Everybody's like, oh yeah, of course that was a good time to be putting money to work. At the time, nobody thought it was a good time to be putting money to work.
Nobody.
There are these same people who were like, there's no way I can give you money right now. The world's ending. And so anyway, I'm really glad that I launched what I did. And I was up 88% in 2020 between May 1st and the end of the year. And yeah, it was a good time to be putting money to work, but I also still dramatically outperformed, the indices. I think from May 1st until the end of the year, the indices were up 30% or something. And, I was up 88% net of fees. So anyway, yes, I'm going to take credit for that, but yeah, so I'm happy we can talk more about it, but yeah, I did make a big bet on, U.S. cannabis. And that also performed really well last year, specifically kind of in November when, Democrats took the White House and the House. So the stocks really rallied. Yeah.
So what was the thought process on saying, okay, because there's two things that you had to get to, right? You're like, okay, one, I want to put capital work at the worst time ever, or sorry, not the worst time ever, potentially the best time ever, but when no one's doing anything.
Right.
Very
uncertain.
Yeah. And then the second jump is, okay, well, I'm going to deploy this capital in US cannabis stocks, so let's get to that second jump. What inspired you then to place these bets in US cannabis?
Yeah, so U.S. cannabis is something I had been following for a few years already at that point. And my biggest holding that I bought that contributed a lot last year, and I still am a shareholder of, is this company Green Thumb Industries. So that's my biggest holding, biggest cannabis holding in my fund. And, it was a big contributor last year. I still am a shareholder of the stock, still really bullish, super bullish on this company. But yeah, so when I was at Marcato, at my former firm, we invested in Green Thumb Industries right after it went public. It went public in the summer of 2018. And I met with the CEO on the roadshow when they were going public. And that was really when I first started learning about the US cannabis industry. And I mean, I was just trembling with greed, at the opportunity. And I'm happy to talk about it because I feel like it's not broadly understood. And, I think it's an incredible, like basically a generational investment opportunity that, if I'm right about it, hopefully I'm never going to have to do anything else again, after this works out, if it works out the way that I hope. But part of the misunderstanding, I think, the reason people don't really appreciate what's happening is because of what's happened in Canada, right? Canada legalized marijuana in 2018. And so when people think about public equity cannabis investments, the vast majority of people just think about these Canadian companies like Tilray and Canopy Growth, which basically what happened to when Canada legalized marijuana in 2018, these companies like Tilray, Canopy Growth, they went through this huge bubble in their stock market, right? Like the prices went up to insane, unjustifiably high prices, and then they've crashed. And it turns out that those companies are just not good businesses. They've never made money. They have no path to making money. And their stocks got overhyped, and they're just not good businesses. And the reason why is it just has to do with the way that Canada legalized marijuana, where basically the government still really controls the distribution and captures a lot of the value in the value chain. And these companies that everybody heard of, like Tilray and Canopy Growth, at the end of the day, those are just farming businesses. And farming businesses suck. I mean, they're bad businesses. I mean, no farmer in the history of the world has ever gotten rich. I mean, you never hear the story about that really rich farmer, and, I'm joking about it. It's sad, but it's just kind of the way it works. It's a commodity. And so there's not a lot of value in producing it. But because Canada legalized at their federal level, those companies, Tilray and Canopy Growth, they were allowed to list their stocks on, the major U.S. stock exchanges. And so any retail investor or anybody who wanted to get exposure to cannabis, that was the obvious way to do it. And so people didn't really appreciate or understand that, look, those are the readily available investment opportunities, but those happen to be companies that are not set up to really make money. Even though cannabis is going to be this big growth industry, those companies are just not positioned to make money from it. So you've had this unfortunate situation where a lot of retail investors and people kind of had this bad experience investing in cannabis, and so they don't understand what's happening in the US. But what's happening in the US is totally different. And it's very ironic because this company, Green Thumb Industries, is making tons of money today, real EBITDA, real free cash flow, and still growing its top line at mind-boggling rates, and will continue to do so for the next decade. So it's like a combination of profitability and growth that I've never seen in any other industry. And the runway for growth is still, we're still just in the earliest innings of it. But because our federal government still hasn't legalized marijuana, this company, Green Thumb Industries, is not allowed to list its stock on the major US stock exchanges. And so it trades over the counter. And so, retail investors either don't know about it or can't buy it. And even major funds, from a compliance standpoint, are not allowed to buy it. And so you have basically all of these potential investors who have not been able to buy the stock and are still not, and still won't be able to until we have some kind of federal reform. But for me, I don't mind, just owning the stock and waiting for that to happen. And one day, I'm still hoping it's going to happen before the midterm elections next year. But one day there will be some cannabis federal reform here. It's completely inevitable. You can't have 40 out of 50 states, saying this is legal and the federal government still saying it's illegal. It doesn't even make any sense. So one day it'll happen and the stock will be able to uplist to a major US exchange. And, every retail investor, every fund is going to want exposure to it. And the stock is just going to go absolutely bananas, I think, when that happens. And we'll see if I want to keep working after that happens or not. But I'm happy to talk about. I realize I haven't even talked about the actual business, so I can go into what they actually do.
We'll get okay. Let's go there. So tell us real quick. What does Green Thumb do, and why is this a compelling opportunity in your opinion?
Yeah. So
with all the expectations that you just said, also in your opinion, just want to make sure everybody.
Yeah.
That's clear.
Well, so what's going on with cannabis in the U.S. is very state by state, right? Like, each state is just kind of legalizing cannabis with their own kind of framework. And, now you have, I can't remember the exact number, but I think it's like something like 40 out of the 50 states have some kind of legal regime. The earliest states that legalized, like Washington, Oregon, California, even, they have not proven to be like very business friendly. And that was the main reason is they didn't put any limits on supply. And those also happen to be states where it's easy to grow outside. And so, there's just kind of lots of oversupply, rampant illegal market. And so it hasn't been very profitable for companies to be doing business in those states. But all of the states that have legalized in the last few years, including like most of the East Coast states that have legalized, have done it with like a limited license framework. And it kind of reminds me basically of like regional casinos almost. Like I grew up in Pennsylvania, and I still remember when I was a kid in the early 90s, when Pennsylvania legalized gambling. And they basically said, when they first did it, they were like, we're going to allow 4 casinos in the entire state, and they just kept it limited. And so, they had a process for awarding those 4 licenses, and, 4 casinos got set up in the state. And it was basically just kind of like a regulated oligopoly. And those 4 casinos just printed money for a long time. And, fast forward 30 years, there's more than 4 casinos in Pennsylvania right now, but there's not like 100, I don't even know the exact number today, but maybe it's like 10 or something like that. And they're all still earning great returns on capital, so like it, I think people worry that like cannabis is gonna basically, so basically what Green Thumb has done is they were really early in figuring out what was going on. The company was founded in 2014. It's based in Chicago. Illinois is its home state. And so they basically realized what was going on, where all these states on the East Coast were setting up these limited license regimes for legalizing cannabis. Like New York is a good example. Like when New York legalized cannabis, they basically just created and awarded 10 licenses. And they basically said each of these licenses is going to allow the owner of the license to operate 4 dispensaries. And so the entire state of New York 20 million people is being served by 40 cannabis dispensaries. And the 10 companies that got the licenses to operate those 40 dispensaries are just printing money, as you can imagine, And so it is basically this regulated oligopoly, but it's happening at a state by state level. And so Green Thumb went around to all the different states that were legalizing with this kind of limited license framework. And they either applied for and won a license, or if they didn't win a license in the application process, then they just bought a license from one of the people who won one. Because a lot of mom and pops won these licenses and then didn't have any idea what to do with them. It actually takes a lot of capital and a lot of expertise once you have the license to kind of build out the footprint, because the product cannot cross state lines. In every state where you get a license, you have to rebuild the entire supply chain, and on the East Coast, you can't really grow outside. And so you have to build a greenhouse, where you can grow cannabis. Then you got to build like a processing manufacturing facility where you take the plant, you turn it into, CPG products. And then you build out your retail dispensary where you sell those products. And so it takes a lot of capital, it takes a lot of time, takes a lot of expertise to know how to do that. And Green Thumb, like I said, they've been at this for 7 years, and they now basically have expanded to, I believe it's now 14 states. They're in 14 states, and in each of these states, it's a limited supply framework where they have one of a limited number of licenses, and they've kind of built out the supply chain, and they're just earning just insane returns on capital. They're doing it across 14 different states. They've now become basically the leader in the industry because they have close to 70 dispensaries now across 14 states, and they're one of the biggest players. So they have the most kind of institutional knowledge, expertise. I love the CEO. I mean, I met with a ton of these cannabis CEOs. He's by far, in my mind, the best, best operator, best capital allocator, best, thinker, most aligned with shareholders, or he's very aligned with shareholders. So anyway, that's kind of the high level overview. Yeah.
Got it. All right, cool. Well, all right. So I have a couple, anecdotal things using Green Thumb as an example, but let's touch on the last thing you were just talking about, management team. You just mentioned you love the CEO. What is it about, what are certain things about management that you look for, you find compelling, other than the obvious align with shareholders? That one, I think we can all agree, like we would prefer that, but
right.
But what are some of the intangibles maybe?
Are you talking about in cannabis or just in general?
Let's say in general, and then you can, if you want, you can use Green Thumb as an example.
Sure. Yeah, I mean, obviously I'm an investor, like I come from a financial framework. So, I think about capital allocation kind of being the most, the thing that I can kind of like look at the most to kind of understand like whether a CEO is making good kind of capital allocation decisions, whether they make sense. So I think that's one of the most important things. I mean, over time, that's how value gets created, right? I mean, you have to invest capital at a rate of return that exceeds your cost of capital, and that's the recipe for value creation. And so I think that's the thing I spend a lot of time on, is just kind of looking at how the management team has allocated capital and whether it makes sense or not. And then, then you talk about investor communication also, and execution of the operations. I think those are kind of the biggest things, like what did they tell investors they were going to do, and then did they do it or not? I think those are some of the things that you can observe as an outsider to kind of determine whether this is a good management team or not. And then, obviously not, if you're a retail investor or a small fund, you don't always get to talk to them, but if you do get to talk to them, then it's really just talking through, asking them questions about like decisions that they made or are making and why they're doing that. And then just kind of using your judgment to assess whether what they're saying makes sense or not, then that's because that's like, it's process versus outcome, right? I mean, even if they try things that don't work, as long as you talk to them and they have like rational reasons or answers for why they did those things or tried those things, then that's what you can hope for.
So then, assessing the downside risk, right? Because as investors, we all got to make sure that we understand what the risk profile is and what your margin of safety. So when you're betting on cannabis, especially right now in the US, what's the potential downside risk? Like, especially, let's use Green Thumb as the example. I mean,
right.
What was the big macro risk that you were and continue to be worried about? And do you think that makes sense to think about for other US cannabis stocks?
Mm-hmm, mm-hmm. Well, yeah. I mean, the thing that everybody worries about is just kind of like over supply, right? Or I think I think people who haven't spent as much time on it, or just kind of I think people haven't spent as much time on it. Like the bear case that they worry about is, isn't this a commodity at the end of the day? And, your whole thesis rests on the fact that, these states are limiting the supply. And so you have these regulated oligopolies. But what if that changes? Like what if these states just let in a whole bunch more supply, markets get oversupplied? And, right now these companies are earning amazing returns on capital, but as more competition is allowed to come in, won't that drive down the returns on capital? So that bear thesis rests on basically each of these states, or each of these 14 states that Green Thumb is in, all kind of allowing in much more supply. But I think there's like many reasons where I don't really worry about that happening, or the effects on Green Thumb, even if that were to happen. Like I think when you're thinking about cannabis, like there's so many. I think there's analogies that you can make to like a lot of different industries that we've seen in the past. I already talked about regional casinos. I think that's like one model you can look at and say, like I said, where I grew up in Pennsylvania, right? Like over 30 years, they've expanded from 4 casinos to 10 casinos. And I keep saying 10. I don't know what the exact number is, but it's closer to 10 than it is to 50, right? But wouldn't they generate more tax revenue if they did have 50 casinos in the state? Like, yeah, of course they would. But do they want 50 casinos in the state? Like, do they want a casino on every corner? Like, no, they don't. Like there's obviously societal effects that would have. And I think that's one analogy you can make to cannabis. It's like, yeah, would they generate more tax revenue if they awarded 50 licenses instead of 10? Like, yeah, but do they want cannabis on every corner? Like, no, it's been illegal for 100 years. Like they want it to be controlled. And that's one of the things that's one of the reasons I love Green Thumb, is because like they've proven across 14 states that they are the operator that the state wants to partner with. Like they've created jobs, they've delivered a ton of tax revenue, they've done it safely, and they've done it across 14 states. So now as new states legalize, like they're more likely to want Green Thumb to come into their states, because they've kind of like proven that they can do it well. And so, regional casinos is one you can look at. I mean, obviously tobacco, obviously alcohol. other CPG kind of companies, that you can look at parallels in all these different industries. And, I think it's funny also, like people would say, when I talk to people who are skeptical, again, they make this is their concern. It's like, well, yeah, what about when these regulatory barriers to entry go away? And part of me is thinking like, well, first of all, I don't know if they ever will, based on my regional casino analogy, but let's say that they do, right? Like McDonald's, fast food is like one of the most competitive industries like you can find, right? Like there's no barriers to entry. Anybody can like start a fast food restaurant. Does that mean McDonald's is worthless? Like, no, McDonald's crushes it, right? They crush it. And so, there's other ways that you can have a competitive advantage besides these regulatory barriers to entry that I think may continue for much longer than people think. But also that is allowing Green Thumb to build up their moat. Like they've been at this already for 7 years, and by the time these, if these regulatory barriers to entry ever completely fall away, it's not happening anytime soon. I can tell you that. Like, we can see the next few years of legislation kind of like coming down the pipeline already. And like, there's nothing on the horizon that would suggest, that any of these states is like really eager to like massively like open up their market. It's the opposite. Like they're going way slower than I wish they would go. Right. Like Virginia agreed to legalize recreational marijuana, and they have a start date of July 2024. It's like 2.5 years before they're allowing even the first sale. And it's kind of like people are worried all these barriers are going to just fall away instantly, and like tons of competition is going to come in. Like that is not what's happening. Like Green Thumb, they already have a 7-year head start. They're going to have at least a few more years where they're getting to kind of build up the institutional expertise, build up their supply chain. And the real holy grail, and this is part of the reason I really like their CEO, the real holy grail is the creating branded consumer products, just like you have in other industries, right? Like tobacco or alcohol. Like look at those industries where like, Marlboro, the inputs into a pack of Marlboro cigarettes cost like pennies, literally, right? But like people will pay $10 a pack for that because it's a brand that they, that they're comfortable with and that they're associated with. I mean, same with alcohol. It's like Grey Goose. I mean, how much does it cost to make like the vodka in a Grey Goose bottle, right? Like it can't be much, right?
This is an interesting question, and I'm going to expose myself here as a toker in the past,
Sure.
I mean, and granted, I always was never, the effect that each maybe different strand can have on you, but a lot of that also is dependent on the setting too. If someone says it's a sativa or something and you end up, I think the sativa is the upper, right? So you could say it's a sativa, but I might pass out in 2 minutes because I'm just tired. Right. Or it's an indica, and next thing I know, I'm up for 3 hours. Never. It all depends on the setting. So using that example of how to really brand certain products, like with tobacco, with alcohol, there's this. It's categorical. It's a different taste. It's a different effect. And with cannabis, you will have that different effect depending on the strand. But you're also talking about stuff that, I mean, yes, things have changed quite a bit, maybe since my college days in terms of how, I guess in mass production, of course, of various flower and cannabis and stuff. But it's still somewhat mind-boggling to me when companies are talking about creating a brand around a certain type of flower strand or something like that, because it's just so dependent on, it's like your groceries, man. You can get a Honeycrisp apple, but 2 Honeycrisp apples are not going to always taste the same. So it's an interesting thought process I've had when it comes to like the idea of branding of consumer cannabis products and like being a real moat in any shape or form.
Yeah, no, I mean, I think it's definitely going to happen. I mean, I think it's definitely happening. And, you know, I think this is why it's so exciting too, right? It's like, yeah, I mean, you know, like anybody, I mean, obviously there's like hardcore users, but like a lot of people who've like tried cannabis in the past, right? Like, yeah, it was in somebody's dorm room. It was like some random baggie that like somebody had, and like, who knows like what the experience was, right? But like, I think this what's so exciting as you think about like 5-10 years from now, that you are going to have like consistency of experience, you know, from like a consumer branded products. Like you're going to have consistency of experience. You're going to have like real quality control. And you are going to have, I think you touched on like sativa versus indica. I mean, that's just the tip of the iceberg, you know, from what you like all the different like cannabinoids and terpenes and like all these things that like, these companies are just starting to like scratch the surface of being able to like formulate like really specific, you know, experiences and products based on like research. I mean, like, you know, nobody has ever been able to do like research before. And so now that they can, and like they're learning more about the plant and different strains and, you know, different formulations and like all this stuff. I think it's like super exciting that you're going to have like all these different products.
That's a good point.
And, you know, like, and for specific use cases, you know, like they make like ones that are specifically to like help you go to sleep, you know, for people who have insomnia, you know, right. And I think that's what's also exciting. It's like, there's just decades of like mountains of anecdotal evidence, you know, of like, even like from a medical standpoint too, right? Like people using it for sleep, for pain, for anxiety. Right. And again, that's been like without any research or like specific formulations, like and, you know, once companies can really start to do specific research in these formulations, like, I think you're going to have like an explosion of kind of different products, and it's going to be super exciting. And I think that's another thing that people are not appreciating right now.
For sure. And you know what, I guess, and I should probably correct myself. Like I've seen, you know, like I have friends and family, you know, if they get this, but I'm mostly talking about the gummies, like the edibles. That freaks me out the most. Cause like I've done the edibles back in the day.
So I think this is exciting too, right? It's like
up, all right.
Yeah,
like,
totally.
You know,
that's
it's a lot of trial and error right now. That like I see it, I'm like, all right, I know my experiences back in the day. Like I'm not about to do like trial and error with some of that stuff.
No, exactly. I think a lot of people have that experience where, like, you know, you ate a brownie and you had no idea how much was in it, and then all of a sudden, then like you weren't high at all, and then all of a sudden you were just like completely out of your mind, and you end up having a bad experience because you had way too much, right? But I think now, I mean, already now, like, you know, Green Thumb and some of these other companies, they make products that'll, you know, that you can buy gummies and it'll say, you know, each one of these gummies has 5 milligrams of THC. And so you know exactly what you're getting. And, you know, microdosing is actually a huge thing for to kind of convert new people who haven't tried it before. You know, like if you want to start, you know, you can have a 2.5 milligram THC gummy or, you know, and that's a good way to like start, and it'll make sure that you don't have that like horrible kind of experience, you know, where you have way too much and then you never want to do it again, you know?
So Shawn, what are some of these companies that, you know, are clearly out there, they have a name brand, what are they getting wrong? I mean, look, I'm in LA. MedMen is on every friggin' corner here. You know, I mean, I remember looking at their financials a while back, and everybody, you know, I think a kindergartner could look at their financials and be like, hey, oh my God, you know? So, I mean, what are some of these brands, full disclosure, I'm not a shareholder in MedMen. You know, what are some of these companies, what are they doing wrong? Like what's happening?
Yeah, well, I think
too fast. Like what?
Yeah, I think so. I think a lot of them kind of got over their skis in terms of like building out their infrastructure ahead of, having revenue to support that. And, it is a massive growth industry, I think this year, legal U.S. cannabis sales in states where it's legalized are on track for something like $24 billion, and most projections say it should be a $100 billion industry by the end of this decade, and I think that could even be low. But so you can do the math, and it's like 15-20% top line CAGR for the industry for the next 10 years. And so it is this massive growth opportunity, but like you still have to execute, like that doesn't mean you can go hire like 100 people and that you're all just going to be rich because like you're in the cannabis industry, right? Like, that again, that's one of the things I like about Green Thumb is like just super disciplined, like not getting ahead of their skis. Like, and I think a lot of these people viewed it, or some of these companies viewed it more as like a land grab. Like, we want to get licenses in as many states as possible. Whereas Green Thumb, like they're not trying to be in every single state. They're trying to be in the best states, and they're not trying to be, they're just not overbuilding, and they're watching every dollar, and so that is where the management team makes a real difference.
Absolutely.
I think MedMen was kind of the poster child for having like irresponsible management that was just running way too fat. You hear crazy anecdotes and stories of like what was going on at their corporate headquarters, like before they really had like any revenue to really support that cost base. Because that's the other thing in this industry, which has made it tough so far, but I think ultimately is gonna actually end up being beneficial for the companies. It's like it's really hard to actually raise capital because of what I talked about earlier, like because the stocks trade over the counter, institutional investors for compliance reasons, a lot of them are not able to invest, and so it's really hard to raise capital. And so even though there's this huge long-term growth opportunity, you have to kind of at the beginning you have to be able to bootstrap yourself to profitability. Because there's not a lot of available capital. And that's another reason I think Green Thumb just has a huge advantage now. They're already run rating like, close to $400 million of EBITDA, so they're generating a lot of cash that they can use to invest. And that's just widening their moat, against other competitors who just can't get capital to invest.
Absolutely. All right, Shawn. So we're coming close to the end here, and I appreciate this. This has been a really fun conversation on cannabis, and what's going on in the U.S. for that. Really, it's very much a special situation,
right,
for lack of a better term. So, we talked about a few investing experiences that you had, current ones included here. But what would you say throughout your career? What was an investing experience that changed your career or impacted your career the most?
I don't know. I kind of feel like I've already talked about. I think personally, working with the Pershing Square team at a very young age kind of taught me a lot. And then in Mercado, I kind of talked about Alexander and Baldwin and just kind of like engaging with some of the smaller companies. But I think we've kind of covered a lot of them.
Gotcha. Okay. No worries. Well, then to close, no worries. All right. So to close this out here, then, for folks, let's focus in on cannabis, and this special situation, let's say, for investors that never even considered it, might start thinking about it based on, some of the things that we've talked about today. What would your advice be for those folks that might be looking at cannabis finally for the first time?
I would say it's really volatile right now. I mean, small caps in general are volatile, as you know, but I think especially these cannabis stocks because they're traded over the counter, because there's not a lot of institutional capital able to participate in the space. You know, the stocks move a lot, and so I think you almost just have to buy it knowing there's going to be like even above average volatility, and just come back in a few years. Resist the temptation to like look at it every day. Just buy the stock, come back in a few years, and I think you'll be really happy. But I think you do have to be careful too, because there are a lot of, we touched on it a little bit, but like I think a lot of people fall into this trap where they're like, oh, I want exposure to cannabis. It's this huge growth industry. And that's true. But again, there are a lot of companies that are not going to make it, like, the Canadian companies that didn't have good business models, or MedMen that was just not run well enough, And so I don't know if I'm supposed to, give specific stock recommendations, but like I said, I own Green Thumb. That's the one based on my research that I feel like is clearly, in my mind, going to do really, really well. And, but there's an ETF also called MSOs basically. So, if you don't trust my research, or you don't want to do your own research, you should do your own research, but if you don't want to do research on a specific company, there is an ETF called MSOS that just owns kind of a basket of U.S. cannabis companies that is probably going to do well.
Gotcha. All right. Well, Shawn, with that, again, thanks for spending the time with me today to kind of BS, to really not BS, but like really get into what's going on in cannabis a little bit from your perspective. So where can our audience go and find more information on you, to follow you, your website, all that good stuff?
Yeah, I don't have a website, but anybody who wants more information can reach out to me. I'm pretty easy to find. I'm on LinkedIn. Just shoot me a message, and happy to.
You got to put a photo on there. It's just a grayed out.
Oh, that's a really good point. Yeah, I should do that. Yeah, that's a very obvious thing that I should do.
And get on Twitter, man. Come on, dude.
I know. Well, David Polansky, who introduced us, keeps telling me I have to get on Twitter, and I should. I don't know.
Marketing tools.
I know. I feel like I would waste so much time on Twitter that I don't know if it's worth me getting started. That's why I've just kind of not even started. But I'll keep thinking about it.
Very cool. All right. Well, Shawn, thanks again, man. Really do appreciate you taking the time here. Good luck. Stay safe. Happy holidays, and Happy New Year. And look forward to chatting with you again.
Yeah, you too. It was a lot of fun. Thanks again for having me, and happy holidays, and keep in touch.
Thanks, man. Talk to you soon.
Bye.
This podcast is for informational purposes only and is not an offer or solicitation of an offer to buy or sell securities. SNN Network, SNN Inc., and the Planet MicroCap Podcast and the representatives are not licensed brokers, broker-dealers, market makers, investment bankers, investment advisors, analysts, or underwriters. We do not recommend any companies discussed. We may buy and sell securities in any company mentioned and may profit in the event those securities rise in value. We recommend you consult with a professional investment advisor, broker, or legal counsel before purchasing or selling any securities referenced in this podcast.